Hey guys, well, thanks a lot, Nicole. Listen, we lot to talk about here to help the investment pros. NewOak Capital President Jim Frischling's back with us. Monster Worldwide Vice President Joni Courtney going to tell us what those jobs numbers are going to be Friday. In the meantime, it makes a lot of people angry, though, Jim, when Wall Street can ignore stuff, right? Because they do that a lot. The earnings were $1. I know you were expecting to, but if we take out this and remove that, and you remember it was leap year, and then, of course, if we take all of that out, we would have had a good number. I mean, people who are in the market, the average investor, they look at that chart of the Dow, and before that we had a chart of hourly wages. One is like this, one is like that. How do we reconcile the two?
Well, on the jobs front, I think people, while the number was a little disappointing, I think there's no doubt that the labor market is recovering, and I think it is going to lead to improved wages. I'm actually seeing in our space, in the financial services space, happy we can afford it, and I actually think we're going to see more of that. More confidence in the job market is going to actually lead to a stronger consumer. The fact is, the equity markets have been incredible. This is an unloved rally which we've been talking about, but I do believe we're going to see wage increases starting very soon. I'm already seeing it in my space.
What do you think, Keita? Have other social skills.
True.
You know, I mean, you talk about communication. They know how to take orders. They know how to work. They have. I take work ethic. I think 95% of the people can do 95% of the jobs. It's whether you're willing to get up at 4 o'clock in the morning and do it, Jim.
We talked about it on the show last night about athletes and people who play team sports. We also all highlighted that military, the discipline, the work ethic, the commitment are very, I guess, valuable traits to look for employees.
All right, guys.
I think it's really an issue right now.
Jim, I remember when Rule Reg FD came out, and after the first financial crisis, the Enron, and these rules were so draconian that all they did was put the small brokerage firms out of business. They didn't put the Merrill Lynch's out of business or the Bank of America's. The small guy, where that was 25% of their budget. And I don't think that Washington ever thinks about these rules. The pendulum always swings so far over to the other side.
Well, these rules do hit the smaller firms far harder than they do the larger firms. They don't have the revenue streams or the diversification of their businesses to absorb these increased costs. So regulations, and I'm not surprised that ranks second. You highlighted as the first thing, tax reform. They're going to have to make efforts to cut taxes. Otherwise, we are going to continue to have a stagnant growth because businesses are going to be reluctant to invest. So those are the two things, and I agree with both.
What do you think, Scotty?
Your insurance rate's going up 15 to 30%.
I was going to add, I couldn't agree with Matt more about the uncertainty and what it does to the businesses. Honeywell was compliant with the Affordable Care Act and still got the lawsuit. During the implementation of Obamacare, our health care expenses went up dramatically because health care companies simply said, hey, we don't know where it's going to come out, so we're going to charge you a lot. Yep. So I couldn't agree more.
We lost our There's been an element to this rally that you don't see when you see the headlines, right? The S&P's at a high, the Dow's at a high. Small cap names have been under a whole lot of pressure. A handful of names have garnered up all the money. I think a lot of these hedge funds are chasing performance. Nevertheless, though, people are legitimately afraid of Hewlett-Packard, but I think that's a real big, probably wrong presumption here.
On Stratus, I think you highlighted the competition. I'm also going to highlight the regulation and how hard it is to get approvals. And this is an innovative space, but one that the regulatory environment is going to be pretty hard on. In terms of the small cap, the Russell 2000 did very well today, really on no news. And I was thinking, actually, it shoes the risk appetite is on right now. So even some of the small guys.
Well, I mean, I actually think most of these small caps are oversold. All right, Jim. Detroit is a mess. It's been a mess for a long time, and they followed the same script that we see a whole lot of European countries following. They got a chance to start all over again. What do you think they should do? How should they pull themselves out of this?
Well, the grand bargain that was reached, which was basically the forgiving of 3/4 of their unsecured debt, plus pensioners, both retirees and active, taking hits, private investment to save the museum, the art collection. So that was step one, getting rid of some debt. 2, it's infrastructure, and it starts with police, fire departments, safety, and they got to deal with some public transportation. And now we're up to business development. Dan Gilbert, the owner of Quicken Loans, started a real estate company. And there's Bedrock. He is championing downtown. He's trying to attract other investors, and the public-private partnerships that he's going to form and other businesses are going to form. So the fact is, this is a huge challenge. It's going to take years.
What do you think, Jim?
No, I like it as well. I think cooking and appliance growth is expected to be up over 4% for the next few years. The slowdown in Europe, I think, has been a little bit of a headwind for them, but their acquisition strategy, which you're highlighting, that emerging countries, they want to own these types of products, I think that's a real good thing for the company.
All right, Mrs.